Most people pay taxes directly from every paycheck, but billionaires often play by a completely different financial rulebook. While ordinary workers lose a large portion of their income to taxes, the ultra-wealthy use investments, businesses, loopholes, trusts, and legal financial strategies to reduce how much they pay. They don't hide money illegally. They understand how the system works better than everyone else. In this video, we'll uncover how billionaires legally pay less tax, the strategies they use to protect wealth, and why the tax system often benefits asset owners more than average workers. Today, we will talk about how billionaires legally pay less tax. So before we start, make sure to hit the like button and subscribe to my channel. 1. Understanding the difference between income and wealth. One of the biggest reasons billionaires legally pay less tax is because the financial system treats wealth differently from ordinary income. Most middle-class workers earn money through salaries or wages, and taxes are automatically deducted from every paycheck. Employees have limited flexibility because governments can easily track and tax earned income. Billionaires, however, rarely depend mainly on salaries. Their wealth usually exists in the form of assets such as stocks, businesses, real estate, investments, intellectual property, and ownership stakes in companies. These assets can increase in value dramatically over time without being immediately taxed. For example, if a billionaire owns billions of dollars worth of company shares and those shares increase in value, they may become significantly wealthier on paper without officially realizing taxable income. 2. Capital gains taxes are often lower than income taxes. Another major advantage available to billionaires is the lower tax treatment of capital gains compared to regular employment income. Capital gains refer to profits earned from selling investments such as stocks, real estate, businesses, or other appreciating assets. In many countries, long-term capital gains are taxed at lower rates than salaries or wages because governments want to encourage investment and economic growth. This creates a system where investors and asset owners often pay lower effective tax rates than employees. For example, a worker earning a salary may face high income tax rates plus payroll taxes, while an investor selling appreciated assets may pay lower capital gains taxes. Billionaires often structure their wealth so that most financial growth comes from investments rather than traditional income. This means they legally benefit from more favorable tax treatment. 3. Borrowing against assets instead of selling them. One of the most powerful legal strategies used by billionaires is borrowing money against their assets instead of selling those assets. Wealthy individuals often own massive amounts of stocks, businesses, or real estate that continue increasing in value over time. Rather than selling these assets and triggering capital gains taxes, billionaires can use them as collateral to obtain low-interest loans from banks. Because loans are not considered taxable income, they can access enormous amounts of cash without creating major tax obligations. This strategy allows wealthy individuals to maintain ownership of appreciating assets while still funding luxury lifestyles, investments, and business activities. As their assets continue rising in value, they may repay loans using future wealth growth or refinancing strategies. Banks are willing to provide favorable lending terms because billionaire assets are considered highly secure collateral. 4. Businesses and corporations provide tax advantages. Owning businesses and corporations provides billionaires with numerous legal tax advantages unavailable to ordinary employees. Business owners can deduct operational expenses such as travel, salaries, equipment, office costs, research, marketing, and professional services from taxable income. Corporations may also use depreciation rules that reduce taxes by accounting for the declining value of business assets over time. Wealthy entrepreneurs often structure multiple companies, trusts, and investment entities to maximize financial efficiency and minimize taxes legally. Governments frequently create tax incentives to encourage business investment, innovation, and job creation. These incentives may include deductions, credits, and reduced tax rates for certain industries or investments. Billionaires also benefit from international business structures that allow profits to move through lower tax jurisdictions legally. Large multinational corporations often operate across dozens of countries, using global financial planning strategies to reduce tax burdens. 5. Trusts, foundations, and estate planning strategies. Billionaires also use trusts, foundations, and estate planning tools to legally protect wealth across generations while minimizing taxes. Trusts are legal entities that hold assets for beneficiaries and can provide significant tax advantages depending on how they are structured. Wealthy families often place investments, businesses, or properties in a trust to reduce estate taxes and maintain control of wealth over long periods. Charitable foundations are another common strategy used by billionaires. Donating money, stocks, or assets to foundations can generate large tax deductions while also allowing wealthy individuals to support causes they care about. Some foundations also help maintain long-term influence over how charitable funds are distributed. Estate planning is especially important for billionaires because transferring massive fortunes to future generations can create substantial tax liabilities. 6. Offshore accounts and international tax strategies. Globalization has made it easier for billionaires and multinational corporations to use international tax strategies legally. Offshore financial centers and low-tax jurisdictions often attract wealthy individuals seeking to reduce taxes through global investment structures. Offshore accounts themselves are not illegal if properly reported to tax authorities, but they can provide privacy, asset protection, and financial flexibility. Large corporations frequently shift profits between countries using legal accounting methods designed to reduce overall taxation. Countries compete for investment by offering lower corporate tax rates, special economic zones, and financial incentives for businesses and wealthy investors. Billionaires may also relocate assets, businesses, or personal residency to countries with more favorable tax laws. International tax treaties and financial regulations create opportunities for sophisticated tax planning unavailable to ordinary workers. 7. Why the tax system rewards investment and ownership. The reason billionaires can legally pay lower effective taxes is largely because modern economies are designed to reward investment, ownership, and economic growth. Governments want businesses to expand, investors to fund innovation, and corporations to create jobs. As a result, tax laws often provide incentives for investing in companies, real estate, technology, renewable energy, manufacturing, and other sectors considered beneficial for economic development. Capital gains tax reductions, business deductions, investment credits, and depreciation rules were originally created to stimulate economic activity. However, these same rules disproportionately benefit wealthy individuals because they own the majority of financial assets. Employees who depend mainly on salaries receive far fewer tax advantages because labor income is easier to tax consistently. Wealthy individuals also have teams of accountants, lawyers, and financial advisors who understand every detail of tax law and financial planning. 8. The bigger lesson about money and financial systems. The discussion about billionaire taxes reveals a deeper truth about modern financial systems. Wealth is built and protected differently than ordinary income. Most people are taught to work for money, but the wealthy focus on owning assets, businesses, and investments that generate long-term financial growth. Tax systems around the world tend to reward ownership and capital because governments prioritize economic expansion, investment, and innovation. Billionaires understand these rules deeply and structure their financial lives accordingly. This does not mean ordinary people cannot improve their financial situations. Learning about investing, taxes, entrepreneurship, and financial literacy can significantly improve long-term economic opportunities. If you like this video and would like to see more like it, please give it a thumbs up, leave a comment, and click the button to subscribe.